Welcome back to Small Caps. My name's Kerry Stevenson. Today I am speaking with Duncan Craib. He is the Managing Director of Boss Energy. Now, some of you will know that they've recently done a very large share placement. We're going to get into that in a moment. First of all, let's welcome Duncan to Small Caps. Great to see you.
Kerry, thank you. Thank you very much for the opportunity to be on your show today.
Well, it's great to see the project behind you. But before we get into the project, let's just remind some of our listeners today, you've got quite a strong background in the uranium space. So if you could just share with our listeners your background.
Sure. Kerry, at the end of 2007, I joined a company called Kalahari Minerals, which had a 43% holding in Extract Resources. And as many of your listeners would remember, Extract Resources did tremendously well in the last bull run on the ASX and was eventually taken over by China General Nuclear in April 2012 for about $2.5 billion. Subsequent to that, the chairman of China General Nuclear offered me the role of being finance director of their primary asset, the Husab mine in Namibia. So with my family and young children, we moved to Namibia for 4 years, where I oversaw as finance director the construction and commissioning of the Husab mine. And that led me one day to receive a phone call from the board of Boss Energy, who said, "Dunk, you've earned your stripes. It's time to come home, take the Honeymoon project on." And that's really, I got returned to Australia at the beginning of 2017 after sort of 16 years getting international mining experience.
I have to say it, I bet your wife thought it was a honeymoon coming back to Australia after being all those.
She did. I mean, just absolutely. We're missing our sort of parents and grandparents, missing grandchildren. So wonderful to be home.
Okay, so you've been with Boss Energy now for 4 years. We're going to get into the background of Boss, but I really want to bring up this latest announcement where you've just raised $60 million through a share placement to acquire 1.25 million pounds of uranium in the US. Now, that's clearly a tactical, strategic move. Can you just outline what was the reasoning behind that? What was the thinking?
Look, it's for many reasons, but primarily since joining the company back in 2017, my publicly stated goal and the motivation has really been to de-risk Honeymoon, both technically and commercially, such that we can capitalise on being a re-emerging producer, a restart producer, with first mover advantage into this next bull run. So my sincere hope is that the perception of our long-term shareholders and you is that it's being shaped on what we've achieved in the past 4 years, which is tremendous technical advancement, such that this capital raise really fits within that body of work of advancing the project. So the focus of our actions to date has been to complete the necessary work under tough industry conditions. I mean, it's only recently that equity prices have started to rise. So, and that's to de-risk and be Australia's next uranium producer and one of the first globally to come back into production. So today, yesterday's announcement was really just along those lines. We're acquiring physical inventory to mitigate risk, which we can touch on, to enhance discussions with off-takers, and really add a spark to a market which the company is fundamentally long in, all in one swoop.
Why does it enhance your opportunities with the off-takers? Is that because you've already got inventory so you can start to enter into negotiations and contracts?
It does. I mean, it essentially means that we can enter into those off-take contracts we can start sooner than our first production. We can meet our obligations. When you're in negotiations with utilities, they're often saying, okay, you're a re-emerging producer, you've produced before and exported, but there is a slight risk, as with any mine, in that initial startup phase. But what this does, it gives you almost like you're on an equal footing with an existing producer. If need be, and there is a slippage of a month or two, we'll be able to feed physical inventory into that contract. So it gives their first customers a lot of confidence in their contract standing, and in turn gives us the ability to negotiate much better terms.
Your average price of buying this uranium was about $30 a pound. Is that correct?
That's correct. 30.15. That's correct.
So
currently the spot price is today, it was 30.75, and our belief is that that spot price, I think we've got it at the right time. I think you'll start seeing it begin to move.
actually, and that's what I was actually going to ask you, because you clearly have quite a lot of confidence in the spot price getting stronger over time. And just before you said the next bull run, do you think that we're just starting to see a turnaround in the uranium space right now?
I do. I think the uranium market's definitely tightening up. And we saw that when we went out trying to make those arrangements of purchasing the physical material. We're aware there's another publicly stated mine in Canada, Denison, that's still out there looking to acquire their uranium. We noticed that as we were sort of putting in offers on uranium, some were being taken out by existing producers and other utilities coming into the market. So it does feel that the market's beginning to tighten, absolutely. So yeah, and of course, then you go back to the general demand and supply fundamentals, which are clear that utilities by and large are now reliant on inventory, and that new mines are needed, new supplies required.
Why do you think now, I'm just interested, Duncan, why do you think now there suddenly seems to be a lot more focus on uranium and this supply demand? Is that because there's more reactors coming on stream, or are there more countries that are converting to? Because it's a very clean source of fuel, isn't it?
Sure, absolutely. I mean, it's carbon-free 24/7. It is the cleanest, other than hydro, cleanest source of power. So I think, I mean, for all the reasons you stated, absolutely. But I think it's also a case that ESG principles are and government policy is now heading towards clean energy. That these targets of carbon-free by 2040, 2050 is really coming through government policy around the world. And that's what I believe has been the real driver. So what we've seen with the uranium equities is sort of investor sentiment front-running that expected increase in the commodity price, which, interestingly, was actually similar to what happened back in 2005, 2006 when I started getting involved. It was very similar. But it's really the coordinated approach, or not coordinated, but just the all-embracing approach of the various governments, more so overseas than in Australia with regard to nuclear, which is logical when you think France, 75% of its power comes from nuclear. Canada, it's got nuclear. Switzerland's got nuclear. The US, 20% is powered by nuclear. So within the industry, and then worldwide, 11% of the world's energy is supplied by nuclear. So within the industry, we just believe it's got a role to play, and it's got a role to play alongside renewables, whether, hydro, as we mentioned, or wind or solar. It's definitely got a role to play.
And possibly an even bigger role going forward. And one of the things, you've got the Honeymoon uranium project down in South Australia. Now, that has produced in the past. Perhaps just give us a little bit of background as to the production in the past, why it closed down, and what's your vision going forward?
Sure. So the Honeymoon mine was previously owned by Uranium One. It went into care and maintenance after producing for 18 months in 2014, just after the Fukushima incident and declining uranium prices. The Boss Energy managed to acquire the project in December 2015. And since then, we've been really trying to increase the production profile and lower the operating costs. And that's to get that competitive advantage for the next cycle. So we've been managing our cash flow very sensibly over those past 4 years. We run a tight team, really working and partnering with some fantastic sort of technical leaders in the field, such as ANSTO, Australian Nuclear Science Technology Organisation, and others. So it's really been, like any mine, always you want to try and reduce your corporate costs, you want to lower your operating costs, increase production profile. So where we're at now is that within sort of 10 weeks' time, we'll be releasing our enhanced feasibility study. And our stated goal there is to have a nameplate capacity of up to 2.45 million pounds. And we're trying to reduce our costs by about 10%. And that's an internal goal. We're yet to see the numbers from GR Engineering, our study manager, but that's our goal. Now, if we can achieve that, we're definitely in the lowest quartile of cost producers worldwide. And the overall sort of motivation, which dovetails with this latest purchase of strategic inventory, is that you want to be in production and have first mover advantages, such that when the uranium price sort of spikes or has that overshoot in the initial few years, we can be in production, looked upon as a stable producer, layer our contracts into a rising market. You want to do that before it gets to prices of, say, I don't know, prices that incentivize other new big mines to come back on. You know, there's a lot of latent capacity out there. There's McArthur River, Kazakhstan can sort of expand their operations, etc. We want to be ahead of that curve and be looked upon as a viable alternative sort of source of providing this raw material.
So talking about timeframes and the likelihood, you know, we mentioned before that it was put into care and maintenance, and that was when the uranium price literally fell into a heap, didn't it? It was, and it was just uneconomic for most mines, and many of the mines to keep operating. But a lot of these contracts are long-term contracts, so there was, I guess, years of supply that had been built up, and so we had this sort of lag effect.
Correct.
What's your timing in restarting the Honeymoon project, and are there any challenges in doing that?
The timing is basically contingent now on landing offtake agreements. So offtake agreements will really underpin the debt requirements that we have. Once you've landed those offtake agreements and you can satisfy your debt financiers, you'll then be in a position to, say, have that decision to proceed or decision to mine, and then within 12 months we can be up and running and producing. So it's a very quick time frame. It's one of the quickest worldwide that would be able to come back into production. Wow,
that 12 months, that's amazing. So are you right now in talks with people about these offtake agreements?
Absolutely, and we're in talk with financiers too. So, talking to utilities has been, one of our key sort of focuses of work that we've been focused on. Our colleague Sashi Davies, who's based in France, sort of 35 years in the industry. She's one of the world's top 5 uranium traders. She's on the board of the preeminent industry body called the World Nuclear Fuel Markets, which represents over 73 utilities from 23 countries. Wow. She's got a wonderful sort of, having that many years of experience and wonderful relationship with many fuel buyers. So the way fuel buyers tend to enter into an offtake, it's either through off-market discussions, which we have, or it's also by request for proposals, the tendering process. What gives us confidence too that the market's beginning to develop is that we have had 2 of the largest utilities in the world do technical due diligence on Honeymoon. And that's where fuel buyers, their role is procurement. So they're not technical or engineering experts. It's when they sort of assign the due diligence process to an engineering firm to do a deep dive on the project. And we've passed those with flying colours. So we're not there on price and we're not there on quantity, but it's good to know that the credibility is being established. So I think when I look then more generally, and sorry, I'm on a bit of a roll with this.
No, go for it.
Exciting. But when you think the last few long-term offtakes that were entered into were around $38 US per pound. Current spot price is $30 US per pound. Our all-in cost is around $32 US per pound that we're looking to improve upon. So when you factor in, if you imagine $32 US per pound, and then you've got your financing costs to repay the debt, we're very close to that sort of break-even mark of covering your CapEx, covering your OpEx, covering your financing costs. And then, of course, there's some discipline required in terms of don't enter into contracts too soon. You want to maximise your shareholder return. So, and that's the bit that we'll judge with the market. But this inventory that we've purchased gives you that greater flexibility.
I was just about to say, given the fact that you've just acquired 1.25 million pounds, that at that 30.15 price, that kind of gives you the flexibility to wait to see what the market's doing. Because if the uranium spot price starts to jump up a little bit more, you can you can basically hold back and watch what the market's doing.
Absolutely, absolutely. You know, it really strengthens our hand. It means that we have a range of options now with regard to the restart of Honeymoon. We can sell some or all or none of the stockpile. It also means we can negotiate our debt and offtake agreements from that position of strength. And the best of all is that the potential customers will know that they've got a reliable supplier to deal with. I mean, we've technically proved the project. We've now got inventory to give us that or give them greater confidence that we can supply them, you know, if there is a slight slippage in those initial startup phase. So I think it really has been a strategic move that we feel very, very happy with and getting great sort of response from shareholders and investors alike.
I can almost feel your excitement at the moment, Duncan, because you know, you've hit this great milestone. And one of the things I wanted to ask you was that share placement was taken up that was a very strong take up. Do you think that's showing you that this market is coming back?
Absolutely. And I think when we look globally too, there've been some big capital raises, particularly like NextGen and Yellowcake, for example, Paladin more recently. So there definitely is investor appetite. I think though that while there is that appetite in the space, I think that what we now need to see is the commodity price start to move. But from what I hear in the market, I don't think that's too far off. I think that we'll start seeing potentially some M&A. I think that we'll start seeing some more aggressive moves as the market starts to wake up. Utilities are getting anxious, there's no doubt. Fuel buyers are beginning to think, well, hold on, big chunks of inventory are being taken out of the market. What should we be reassessing our plan? I mean, gone are the days where it's been oversupplied and utilities have been able to just buy and sell on the spot. Hopefully it's going to now revert back to those long-term contracts. And we've seen one or two in the market of late. So I guess overall, my view is that, or my personal view is that I think investors should see this capital raise and strategic purchase of material as de-risking our position on all levels. I mean, it really strengthens our balance sheet and puts us in a very strong negotiating position.
I think that's key, isn't it? It does put you in such a strong negotiating position. But does the fact that the projects in Australia as a jurisdiction, does that give you a little bit of a leg up against some of the other mines around the world?
Yeah, it does. It does. I think, and it's been expressed to us. I think COVID's really taught utilities that reliance on a small number of producers in a limited number of jurisdictions is risky. And Australia being a tier 1 jurisdiction, it just really puts us on good footing. So the explanation given to us a few times is that if we find ourselves having put a bid that's equal to others, we'll probably be pushed towards the front of the queue given our jurisdiction. So, and that's based on strong mining regulations as well, stable government, and that South Australia, for example, has shipped uranium incident-free for 30 years. So right. The country is very important. South Australia as well. I mean, it is the only place, well, the only 2 operating mines are based there, and we're the 3rd one that's fully permitted with an export permit ready to go.
Yeah, so you've got everything ready to go. Do you think the sentiment is going to be changing a little bit in Australia? Look, we all know it's the elephant in the room. There are people here in Australia that go, oh, no to uranium and no to nuclear. But as you said before, it's a zero carbon energy source. It's very clean. People really shouldn't freak out about nuclear as an energy source, uranium as an energy source, because it is clean. It's cost effective. What would you say to those people that still are concerned?
I don't look. I just believe in creating a healthy future and climate for our children and future children, and I see that technology has advanced considerably over the years, and I really think it should be looked at from an educated perspective and looked at from all angles. I also appreciate that I really do believe in checks and balances in our system, whether it be government or whichever industry we're in, whether it be fishing or coal or uranium. So I do like having, I feel comforted that in our democracy we can have that sort of balance as well. So I very much respect everyone's opinions. But you know, it's controversial, but if we can let warships come in with nuclear, powered by nuclear, and we into our heart of our cities, I really think that there's appetite here that we could have nuclear power in more desolate places where there aren't cities that could really provide cheap, sustainable power.
I think that's the key, isn't it? Cheap, sustainable energy for the future. Duncan, before we finish up, because I think it's a very, very exciting time for Boss Energy. What would you say to the investors out there, either your current shareholders or those that are looking at Boss Energy and saying, wow, didn't realize how far advanced you were, because there are no real hurdles for you to get over. What do you think is now a good time for people to look at Boss and invest?
Sure. I'd firstly like to thank all new investors that have joined our register and all existing shareholders. And I feel that this is a terribly exciting time. I think with Boss, you're really going to see a bit of a bellwether or first mover into the space. We've got the experience. We've established a very stable, strong board. Sashi, as mentioned, one of the top traders. We've got Bryn Jones, a very experienced uranium operative on the board, who used to be COO of Laramide and spent years with Heathgate, our nearest ISR mine. And as too, Wyatt Buck joined our board last year, and Wyatt's one of the most sort of experienced operatives and project execution chaps within uranium. I mean, he spent 15 years with Cameco. He ultimately ran MacArthur River. He was headhunted by Paladin to take its Langer Heinrich mine from commissioning to nameplate, and now he resides in Australia. And you know, the past 10 years he's been on another project, First Quantum. But we're just delighted that after a review technically of the project, he's joined our board. So we will be a producer, and I think what investors can look forward to is that this is the real deal. And we've now, as you say, and thank you, we're ready to go.
Well, it's been an absolute pleasure talking to you today, Duncan Craib. I'm looking forward to Boss Energy and any future all the future news that you're going to have coming up. Fabulous picture behind you of the project.
Thank you. No, absolutely. No, thanks very much. That is Honeymoon. And Kerry, thank you very much, and wishing you and listeners all a happy Easter.
Oh, that's right. Easter's coming up. We'll speak to you very soon, but congratulations on that acquisition of the uranium, and I look forward to hearing how the restart goes. Thanks for joining us on Small Caps today.
Thank you.